The ongoing U.S. China trade talks, held in Stockholm, are pivotal as they could significantly influence the economic landscapes of both nations. Despite the anticipation, experts like Elizabeth Economy, a senior fellow at Stanford University's Hoover Institution, foresee only incremental progress rather than a comprehensive breakthrough. The talks follow President Trump's decision to extend a 90-day tariff pause, originally set to escalate tariffs to 145% on Chinese goods, which is due to expire soon. Currently, U.S. tariffs on Chinese imports are at 30%, with a minimum of 10% on goods from other countries. The U.S. administration is actively pursuing individual trade agreements, recently securing a deal with the European Union. The U.S. aims to secure increased Chinese purchases of American goods, such as agricultural products and medical devices, and seeks structural changes in China's economic practices, including reducing overcapacity in industries like solar panels and electric vehicles. Additionally, the U.S. is pressing China to cease its support for Russia and Iran. Conversely, China desires a relaxation of U.S. export controls on technology and a reduction in tariffs to align with the recent U.S.-EU trade deal. The complexity of these demands, particularly the U.S.'s call for changes in China's economic model, suggests that reaching a comprehensive agreement may be challenging in the short term.
Fulcrum Therapeutics, a clinical-stage biopharmaceutical company, has announced promising results from its Phase 1b Pioneer trial of Pacerter, an investigational drug for sickle cell disease, SCD. The trial's 12 mg dose cohort showed that Pacerter was generally well tolerated, with no treatment-related serious adverse events, while demonstrating significant increases in fetal hemoglobin, HbF levels. This development is crucial as increased HbF can potentially alleviate SCD symptoms, offering a transformative oral treatment option. The company plans to release data from the 20 mg dose cohort by the end of 2025. Financially, Fulcrum ended the second quarter of 2025 with $214.1 million in cash and marketable securities, providing a runway into 2028. This financial stability supports the company's ongoing research and development efforts, including the progression of Pacerter into later-stage trials. The drug has already received FDA Fast Track and Orphan Drug designations, underscoring its potential importance in addressing unmet medical needs in SCD. Fulcrum's advancements in this area could significantly impact the standard of care for SCD, a genetic disorder that affects red blood cells and leads to severe health complications.
Global banking technology vendor FIS has announced a strategic partnership with stablecoin issuer Circle to enable U.S. financial institutions to transact using the USD coin, USDC. This collaboration will allow these institutions to offer both domestic and cross-border payments in USDC, a stablecoin pegged to the US dollar, which provides a digital currency option with the stability of traditional fiat currency. The integration is facilitated through FIS's Money Movement Hub, which connects financial institutions to multiple payment networks, enhancing the speed, accuracy, and security of transactions. This move aligns with recent U.S. legislation aimed at integrating digital assets with traditional financial systems. This partnership marks a significant step for FIS, which processes approximately $9 trillion annually, as it integrates blockchain technology with its existing real-time payment and fraud detection systems. The initiative is expected to enhance the adoption of stablecoins among client banks, by offering a regulated and compliant framework for digital transactions. This development comes in the wake of Fiserv's announcement of a digital asset platform featuring its own stablecoin, FIUSD, highlighting a growing trend among financial technology vendors to incorporate digital currencies into their service offerings. The collaboration between FIS and Circle is poised to increase competition in the digital payments landscape, potentially influencing market strategies and consumer payment options.
The Securities Commission Malaysia SC Chairman Datuk Muhammad Faiz Azmi emphasized the critical role of investments in advancing ASEAN's sustainability agenda at the SIDC KASI Sustainable and Responsible Investment (SRI) Conference 2025, with the region targeting carbon neutrality by 2050, an estimated $3.7 trillion United States dollars to $6.7 trillion United States dollars in green investments is required. Currently, Southeast Asia accounts for only 2% of global clean energy spending, highlighting a significant investment gap. The SC is actively promoting sustainable financing by developing taxonomies to classify and identify green projects, focusing on key sectors like energy, transport, and agriculture, which contribute 85% of the region's greenhouse gas emissions. The conference also saw the signing of a Memorandum of Understanding, MO, between the Securities Industry Development Corporation, SIDC, and the Capacity Building Alliance of Sustainable Investment, CASI, aimed at enhancing sustainable finance education and talent development across ASEAN. This collaboration reflects a commitment to building competencies in sustainable finance, crucial for fostering a resilient regional SRI ecosystem. As ASEAN moves towards becoming a major contributor to global GDP, the SC's efforts in facilitating sustainable investments and creating frameworks for transition finance are pivotal in navigating the economic and geopolitical challenges ahead, while also supporting the development of carbon markets and voluntary carbon market guidelines.
Mali, a prominent European payment service provider, has introduced its Model Context Protocol, MCP server, a significant step towards simplifying AI integration for merchants. This new tool is designed to streamline workflows by making Mali's APIs and tools more accessible to AI applications, reducing the technical expertise required for integration. By leveraging natural language processing capabilities, the MCP server allows businesses to perform tasks such as generating payment links and managing customer profiles without deep technical knowledge. This development aligns with the growing trend of integrating AI into business operations, offering merchants a more efficient way to manage payment processes and other business functions. The launch of the MCP server is poised to have a substantial impact on how merchants interact with their payment systems, potentially revolutionizing customer support and automation through AI-powered chatbots. By facilitating the integration of large language models, LLMs, the server optimizes automation processes, making it easier for businesses to adapt to and capitalize on AI advancements. Mali's CEO, Koen Kopen, highlights this initiative as a commitment to innovation and providing real value to merchants. As businesses increasingly seek to future-proof their operations in the age of intelligent automation, Mali's MCP server positions itself as a crucial tool for merchants looking to stay competitive and agile in the evolving digital landscape.
Mambu, a leading composable core banking and payments platform, has announced the enhancement of its Islamic banking capabilities, aiming to empower financial institutions to offer Sharia-compliant products with increased efficiency and transparency. This upgrade is particularly significant as the Islamic banking sector is projected to exceed $3.8 trillion in assets by 2025, with many banks in the Middle East, Africa, and Asia-Pacific regions currently operating on outdated infrastructure. Mambu's advanced platform seeks to provide a modern, ethical foundation for Islamic finance, enabling banks to meet evolving customer expectations and regulatory requirements. The enhanced platform includes features such as Islamic profit sharing, which automates the calculation and distribution of profits, reducing operational risks and ensuring alignment with Sharia principles. Additionally, it supports a variety of Islamic funding and financing solutions, including Mudarabah and Murabaha, through its true SaaS architecture and low-code configuration. This allows financial institutions to scale their operations seamlessly across both Islamic and conventional banking systems. Mambu's latest offering positions Islamic banks to remain competitive in a digitally transforming landscape by adopting new technologies that facilitate agile, trust-based growth.
Federated Hermes Inc. has significantly increased its stake in MapleBear Inc., NASDAQ card, raising its holdings by 15% in the first quarter, now owning 2,832,384 shares valued at approximately $112.98 million. This move highlights the institutional investors' confidence in MapleBear, a company known for its online grocery shopping services under the Instacart brand. The acquisition comes amidst a broader trend of institutional interest, with hedge funds collectively owning 63.09% of MapleBear's stock. Maple Bear's stock recently opened at $47.23, reflecting a 2.4% decrease, but it remains within its 52-week range of $29.84 to $53.44. The company's recent earnings report showed a slight miss on expectations, with earnings per share at 37 cents, just shy of the 38-cent consensus. Despite this, revenue increased by 9.4% year-over-year to $897 million, indicating robust growth. Analysts maintain a generally positive outlook on the stock, with a consensus moderate buy rating and an average price target of $52.30. The company's strategic moves and market position continue to attract attention, suggesting potential for future growth in the competitive online grocery sector.
Federated Hermes Inc. has significantly increased its stake in DoorDash Inc., NASDAQ, boosting its holdings by 30.7% during the first quarter. The institutional investor now owns over 1 million shares valued at approximately $183.5 million. This move reflects growing confidence in DoorDash's performance and potential growth, as several other hedge funds have also adjusted their positions in the company. Currently, institutional investors hold a substantial 90.64% of DoorDash's stock, indicating strong institutional interest and support. DoorDash's stock has experienced a notable surge, opening at $246.44, with a market cap of $104.43 billion. The company recently reported a quarterly revenue increase of 20.7% year-over-year, with earnings per share, EPS, of 44 cents, surpassing analysts' expectations. Analysts have responded positively, with several increasing their price targets for DoorDash, contributing to a consensus moderate buy rating and a target price of $232.12. This optimistic outlook is driven by DoorDash's robust growth and strategic positioning in the commerce platform sector, connecting merchants, consumers, and independent contractors. In addition to institutional movements, insider transactions have been notable, with significant stock sales by COO Prabir Adarkar and Director Andy Fang, raising questions about insider sentiment. Despite these sales, DoorDash's stock performance remains strong, supported by favorable analyst ratings and a positive market outlook. The company's ability to exceed earnings expectations and sustain revenue growth is critical to maintaining investor confidence and supporting its current valuation.
Cheniere Energy, Inc. NYSE LNG has experienced a significant increase in institutional investment, with Federated Hermes Inc. raising its stake by 22.4% in the first quarter, now owning 761,823 shares valued at approximately $176.3 million. This trend is echoed by other institutional investors, such as the Manufacturers Life Insurance Company, Massachusetts Financial Services Company, Kayne Anderson Capital Advisors LP, and Fractal Investments LLC, all of whom have increased their holdings, indicating growing confidence in Cheniere Energy's prospects. Despite reporting a quarterly earnings per share EPS of $1.57, which fell short of the analyst consensus of $2.81, Cheniere Energy's revenues increased by 28% year-over-year to $5.44 billion. The company's stock price has shown resilience, trading at $228.40 with a market capitalization of $50.66 billion. Analysts maintain a moderate buy consensus rating with a target price of $260.36, reflecting optimism about the company's future performance. Cheniere Energy's strategic position in the liquefied natural gas LNG sector is bolstered by key assets such as the Sabine Pass and Corpus Christi LNG terminals. These infrastructure assets are central to the company's long-term growth strategy as they cater to the rising global demand for LNG. Although there has been recent insider selling and mixed analyst ratings, the company's robust infrastructure and market position are expected to support future growth, with analysts projecting an annual EPS of 11.69 for the current year.
Fiera Capital Corp has increased its stake in Synopsys, Inc., Nasdaq S&Ps, by 4.9% during the first quarter, now holding 205,921 shares valued at approximately $88.3 million. This move aligns with a trend among institutional investors, as other major stakeholders like Gamma Investing LLC and Pictet Asset Management Holdings SAW have also significantly boosted their positions in the semiconductor company. Synopsys, which provides electronic design automation software, has seen its stock price fluctuate within a 12-month range of $365.74 to $618.49, reflecting robust investor interest and market performance. Synopsys recently reported quarterly earnings that surpassed analysts' expectations, with an earnings per share (EPS) of $3.67 against a projected $3.40, and revenue hitting $1.60 billion, marking a 10.3% increase year-over-year. The company's strong financial metrics, including a return on equity of 17.09% and a net margin of 34.77%, have contributed to its positive stock performance and market sentiment. Analysts have responded by raising price targets, with Piper Sandler and Rosenblatt Securities setting targets as high as $660, indicating optimism about the company's future growth prospects. Despite the positive outlook, Synopsys shares have recently traded down by 1.5%, opening at $592.63, possibly due to insider selling activities. Notably, CFO Sheila Glazer and Crow Richard S. Mahoney have offloaded significant portions of their holdings. Nonetheless, with a market cap of $91.95 billion and a P/E ratio of 42.79, Synopsys remains a prominent player in the semiconductor industry, supported by a strong balance sheet and strategic investor backing.